What's up, peeps? This is Todd and welcome back to my show. Today I want to talk about the hypocrisy of Wall Street, GameStop trading possibly being halted for the next month, and what you guys need to know about market trends. If that sounds good, let's hop into the video. So I know that online I'm probably known as the real estate guy, specifically the house hack guy, but I've also been trading stocks since I was in high school. As most of you know, the share price for GameStop soared over 240%. That gain in just a couple of days is really unprecedented and quite frankly unheard of. For the lucky traders that were able to get in on GameStop early, they have realized huge profits. But regulators and the folks over at Wall Street are very unhappy about this. It seems that Wall Street is only unhappy about people making money if the folks at Wall Street are not making money. And as it just so happens, as the share price for GameStop soared, many hedge fund managers on Wall Street were actually shorting the stock, meaning they were betting that it would go down. Because of that, they were losing money hand over fist, where in their eyes, a bunch of nerds from Reddit were making money like Scrooge McDuck. So now, regulators want to halt trading of GameStop for the next 30 days. So why does this matter? What does it mean for you? And what is shorting a stock? Let me first address by what shorting a stock is. Shorting a stock is the exact opposite from betting on a stock, thinking that the price will go up. For the Wall Street guys that wanted to short GameStop, what they would do is they would borrow shares of GameStop. But because the share wasn't theirs in the first place, they eventually have to return a share of GameStop. So then they would wait for the price of GameStop to drop, get back in on that share, and then return it to the broker that they borrowed it from. So essentially, you're pocketing the difference from selling it on the high end and then buying it back when it's low. This is a very risky strategy though, because your losses are pretty much unlimited. For example, if you buy a stock the regular way, let's just say the share price is $1,000. The most you can lose on that is $1,000, because if that share price plummets, it goes all the way down to zero, and so you're out $1,000. But when you short a stock, your losses in theory could be infinite, because if you buy a share for $1,000 and you're betting on it to go down, what if instead it goes up? And again, theoretically, there's no limits to how high it can go up, as we just saw with GameStop shares, where it went up 240% in a couple of days. So needless to say, a lot of the guys on Wall Street lost money on GameStop, where smaller traders and internet guys like you and me, and most of us did pretty damn well with GameStop. But now what is happening is trading apps like Robinhood are actually halting trading for GameStop. At the time I'm recording this video, you cannot open up your Robinhood app and buy or sell shares of GameStop. Wall Street, Robinhood, all these other trading platforms, they are saying that the market for this specific stock is too volatile and they are not allowing people to trade. Now, I think this is absolutely insane, because Wall Street gets bailed out all the time. Wall Street makes tons of money year after year, but when you have Wall Street go up against Reddit and Reddit wins, now all of a sudden nobody can trade. Now, to make matters worse, when trading was halted, the share price dropped by 60% in a matter of minutes. So what that means is, for anyone that was still holding on to shares of GameStop, they just lost about 60% of the value, and again, they can't trade, they can't even sell, meaning they can't stop whatever losses are coming. Now, if that seems sketchy, it absolutely is. But it gets worse, because Robinhood did the same thing with Nokia stock. So if you feel a little bit shaky or uneasy to buy into the stock market right now, you have valid reasons to feel that way, especially when big hedge funds can just not like the fact that they're losing money and smaller traders are making money, and they can just shut down the markets. That's pretty crazy. For me personally, I'm an investor by nature, so I'm going to keep investing. But instead of picking single stocks right now that might be regulated or trading might be halted, I might just focus on S&P 500, or of course my bread and butter, which is real estate. But I hope this video was at least informative, and I'll see you guys at the next one. Peace.